Welcome to Nostology. We are your hosts. I'm Jessica.
And I'm Shelley.
And today, Shelley is going to talk to us about a special loan type for investors.
Yes.
So, what is this called again? Because I always get confused with the acronym. DC?
No. Don't confuse people. It's a DSCR loan type.
Yes.
So, I mean, think about it this way. It's like, like I've had clients that make, really great money, but their tax returns make them look broke.
Yeah.
Right? That happens a lot. Or maybe, you're an investor, you write up everything and you can't qualify for traditional financing. So this is a really good option for investors specifically. Yeah. Right? So the DSCR loan, it stands for Debt Service Coverage Ratio.
Okay.
So what that means, it's very high-tech sounding, I know. But basically, all it is you are qualifying, instead of qualifying with, say, you're buying an investment property with your income,
yes,
and you don't have enough on your tax returns, whatever the case may be, you're actually qualifying with what you would potentially rent the property for in comparison to the payment that we're calculating. Okay. So everything is based upon this ratio. So for example, let me just make it really simple. A 1-to-1 basically means the payment is equal to what you're going to charge in rent. Okay. So the higher the ratio, 1.25, 1.50,
right, yeah,
you're making more money on it, right? And
yes,
so it's a little bit better situation. So you're qualifying on basically the rent.
And
that you're going to be collecting.
Where do you get those numbers from to determine what the rent would be for it?
Well, we're going to get an appraisal done, and they're going to do like a rent schedule.
Okay.
But it also potentially, some of the clients, they already have a lease in place.
Okay.
Or
that's
potentially one. Yeah. So we're going to be getting it from several areas.
Gotcha.
And another really cool benefit, because I have people ask me this all the time, can you close in an LLC? And typically you can't.
Okay.
Right? On a regular, traditional, conventional loan, you cannot. You've got to close in your name. It can't be in the LLC. Yeah. But in this case, you actually can. If you have an LLC that's specifically set up for a real estate only, it has to be very specific.
Yeah.
But you actually can put the contract in the LLC name and close in the LLC name.
Okay.
We do have to review it.
Yeah.
But, anyway, so it's actually a really pretty simple loan because we're not getting income stuff from the borrower.
Right. It's all about the property.
It's
and what
all
the property
about the property.
So could this be used, is it only for long-term rentals, or could it be used like short-term vacation or mid-term rentals?
It actually can be used for short-term as well.
Okay.
Yeah. So it's kind of cool. It's not just, it's going to be a long-term rental. It could be an Airbnb. It could be mid-term rental.
Well, the mid-terms and short-term rentals can sometimes be more profitable. Usually the rent can be higher.
Absolutely.
Those mid-term rentals, when you have the insurance claims or traveling nurses. And I know some short or mid-term rentals that are just, making a lot more than the long-term.
Absolutely.
What about first-time, like a first-time investor? This is their first property. Are they able to use it, or does this need to be?
They can.
Perfect.
Because again, it's based upon the property.
Okay.
So that's really cool. Another thing is that, I've got some investment clients that they've reached the maximum conventional amount of properties that you can own, which is 10.
Oh, okay.
After that, there's other types of financing for above 10 properties.
Okay.
So there's no limit on these DSCR. And we don't even calculate out all the payments on the other properties. All we care about is the one property. So if you were to buy with conventional financing and you're at property number 9, oh my goodness, we're looking at every single property, calculating out the percentage, what's the rent, what's the payment, not doing a DSCR calculation on it, but we're looking at it. Is it a loss on the tax returns? There's a lot that goes into it.
Yeah.
This is way simpler, and you've not maxed out at 10 properties.
Right.
So you can keep buying.
Yeah, I know there's a lot of investors who use this product. So now you had mentioned, depending on the ratios and stuff, is that ratio impacting the interest rate or how much they have to put down? What are those numbers look like?
It actually can, yes.
Okay.
So I do have some investors that will do actually a 0.75,
okay,
which is kind of crazy because the rent is less than the mortgage payment, but in some cases that is allowed. The main thing we're looking at is, we really do want good credit. Okay. So the rates are going to be a little higher on this product
than like a conventional.
Okay. But you're not qualifying with a DTI or anything, not income, but we are looking at credit score.
Okay.
And that's going to really help determine. I mean, I do have some investors that are in the 600 range credit score wise,
Okay.
but most of them I'd say they're 700 and up.
Okay.
For this type of, and then it's 20% down.
Okay, that was
Minimum.
my next question. Yeah.
Yep, 20% down, which is the same as a regular investment property.
Right. Yeah. But could that vary depending on, I know you said like with the ratios.
Yes.
So could it be possible where they get a property and then you need more down or a
Correct.
higher interest rate?
Yes.
Okay.
So if you have like that 0.75, right, instead of a 1-to-1, you might be looking at something that, we're going to need some more money down and the rate might be a little higher because it's a riskier product.
So this is it's one that you have to be more in close contact with your lender to make sure that when you're looking at a property and you're running numbers that you understand.
Absolutely.
Not
so
a
this
surprise. Don't go writing the offer without understanding the numbers.
Exactly. Yes. But I mean, this is really great for, especially self-employed borrowers. Those are not the easiest borrowers to qualify, right? Tax returns, averages. Oh my gosh. I mean, it's hard, right?
Self-employed.
Yeah.
Well, and then my husband's now self-employed too. So we ran into issues too when we were doing our HELOC on our house because the numbers just get funky sometimes. So,
and what lenders have to use for traditional financing is very different.
Yeah.
Right.
Well, and I mean, running into, we all try to have our taxes be better. So we don't want to pay as much
low
in
as
taxes.
possible.
So we're writing off as much as we can. We're like calculating everything we can for like our investment property to write that off and for the business. But then it can come back to bite you in the butt. So,
and on this, I'm not even getting tax returns.
Yeah.
Isn't that cool? I love it. It's, it's less intensive, less paperwork, and everything's based upon the property.
Yeah. Some people get a little annoyed at all the personal questions and sharing all the personal documents. So why do you need so much, Shelley?
Yeah. So I know. I hear that a lot. It's like, it's me personally. Just take it out on me. So this is not going to be going and buying your first primary residence, right?
Yeah, just
this is going to be
investment.
Investment properties.
Yeah.
That's what it's specific for.
And I know a lot of people do worry about getting into that because they already have, the car, they have the house, they already have bills, and they don't know that they can qualify for another house. That's hard for some people to do that, even if you are, W-2 employee. So having that option, because if you're going to be able to rent it out, like when I bought my beach condo, we knew we were going to rent it out. We knew it was going to make money. So,
Absolutely.
is there a time frame on renting it out? Because
No.
Okay.
We don't even follow up.
Okay.
Don't care.
Because
Now, the
we
only
had
other thing-
renovations for a year before we were renting ours out, so I didn't know if that played a factor.
No. No, there is no follow-up with that whatsoever.
They don't have to make sure you got a lease for that, that amount.
No, we don't follow up with that. The only other thing, like as far as qualification goes, is going to be like what we call reserves. So, typically with an investment property purchase of any kind, what we call reserves is basically you take that monthly payment for the new property, and there's a certain number of months that we're required to see left in a bank account.
Okay.
And it can be retirement. It doesn't have to be liquid.
Okay.
Right. So it does vary based upon credit score and all of those factors, how much money down, how much reserves. It might be on average, 3 to 9 months
Okay.
of that payment left in some sort of account. Again, not liquid, doesn't have to be cash in the bank. Just, retirement account would work just fine. I've had people use like whole life insurance policies, like cash value for stuff like that.
What about, can someone refinance into this type of loan if they already own a property, or is it only for the initial purchase?
It's for the initial purchase.
Okay.
Good question.
Yeah. Closing time, how long does it take? Traditional, like 30 days?
No, I'm able to close these really quickly.
Okay.
I mean, it's really the same time frame. I can close them in 2 or 3 weeks if I need to.
Okay.
It's just we got to get the appraisal back.
The appraisal, yeah.
I mean, that's going to be the key part. It's less paperwork for me, so really the only time-consuming thing in it is going to be the appraisal.
Yeah, that always is what takes the longest.
Yeah. So
Are they harder is it
it's a regular
appraisal, even though they're going to get the rent numbers for you? I wasn't sure if it was different, like VA, having a specific VA appraiser.
No, it's a regular appraisal form, and we just get the rent schedule added onto it, which we get anyway on a regular investment property as well.
Yeah.
Same thing.
Gotcha.
Yeah.
Awesome. Any other special nuggets, information for us on this?
Let's see. I think you kind of already covered it all. I was thinking about you don't have to have perfect credit. I mean, Most of the time, 700 and above is going to be your best interest rate. But I do have some that are in the mid 600 range. It's not just long-term rentals, short-term. You mentioned that as well. And your qualification is not based on you personally and your finances. It's going to be based on the property.
Now, for the credit score, though, I know you mentioned, so if they do have below 700, it could just impact the rate?
The rate and possibly the down payment.
Okay.
Yeah.
Sure. How much of a difference is it usually in the interest rate? I know it's going to vary, but I mean, like we're at 6% right now on conventional, close to that. I mean, what are you looking at right now on?
I closed one a couple weeks back, and I want to say it was probably 7 1/8.
Okay. So not too, I mean,
but
we're
rates
not talking
hadn't,
about like 9, 10.
No.
Nothing crazy over.
No. But even on just a regular conventional investment property, I mean, those rates are running about the same. Okay. It's actually very comparable.
Well, that's good.
To a regular investment property. I mean, they're just naturally higher because it's a riskier product, right? So the market, that's why the rates are higher. It's a riskier product.
But as long as you're finding a good property that has some good revenue off of it, then
absolutely. It's a great program. It's like I want to do more of them. I would love to do more of them.
I have friends who have over 10 properties and will use that loan type majority of the time. So
perfect.
Especially when it's self-employed, but some of them have actually retired on their investment properties. That's their sole source of income now. And so that is the only income. So that's a hard one to prove, but the DSCR. I keep calling it the DCSR, keep flipping it around. But yes, that's been a great product for them. So
yeah, I love it. I think it's a great product.
Oh, well, thank you. And
you're welcome.
I will have a link in show notes as well as on our socials. So if anybody has questions, they can call Shelly.
Call me. Let's talk about it. Let's get some more build your empire. Let's build the empire.
Yes, we need to go for the midterm and short-term rentals.
Gosh, you make so much more.
And right now with where the property values are, the long-term rentals it's barely cutting it right now. So
yeah, that's true.
It's making a lot more sense to go for the midterm and short term. So that's my little bit of advice.
I agree.
All right. Well, make sure you check out our socials. We're on Facebook and Instagram. It's the Nestology Podcast.
Well, thank you for joining us, where we help you make the best of your nest.
Bye.
Bye.